Hello, good morning. It's Adil Fazal here, market analyst at CFTs.com, bringing you a review of the European markets for the year 2018. So, hope you had a good, happy holidays to everyone. So, hope you enjoyed your Christmas and obviously the festive New Year break. And now we're back to normal. So, 2017, I ended up with around 800 plus points for the year, which is very poor. I need to really work hard this year and get back to that 3,000, 4,000 points a year haul as per normal. Previous years have been almost 5,000. So hard work this year. I need to get back on the grind. Okay, so in terms of European market analysis, this is the first video for the year. So let's look into the actual markets, given the fact that obviously we had light volume float higher, and European markets certainly opened up slightly very weaker, given the fact that Euro is above 1.20 and we've got talk of Mr. Draghi now, or talk of a potential end of QE. So let's see exactly what's going on there, folks. Okay, so let's delve right into it and let's discuss the markets and let's see where the technical setups places at present. Please be sure to visit Trade Signal. Signals and market updates from leading providers at www.tradesignal.com. You can certainly download the app on the Google Play and the Apple App Store. Okay, let's start off with the Asian markets first and foremost. We have the Asian markets overnight. China certainly stronger, although Nikkei weaker. Okay, so that certainly is the status quo there. In terms of fundamentals, the idiot, as we all know, the professional moron, he's perfected that art, the twit, okay, known as the king of Twitter, the twit, who's the king of Twitter at present at the moment, certainly seems to be obviously tweeting vitriol and filth on a daily basis, but we all have to bear with it until obviously he is replaced. Hopefully there's a regime change in America and he gets replaced by somebody who's more sane, okay, who has a bit of common sense as well, talking about a potential nuclear button. Okay, so talking about North Korea and the nuclear button. Again, there was a funny tweet this morning saying there is a Diet Coke button though, so apparently there is no actual nuclear button, but there is a Diet Coke button given the amount of Diet Coke he drinks. That probably explains why he's so orange. Either way, he's a bit of a mutant, X-Men style at the White House. Anyway, enough with the jokes and the little dig there at the professional imbecile known as Mr. Trump. Okay, so again, North Korean situation, Iran concerns as well have been lingering given the protests there. Again, cause for concern. Although there have been potential channels of communication open between North and South, which again is going to exert pressure on the price of oil, which in turn will hurt commodities. Also with regards to the dollar index, certainly coming into support now. The weaker dollar has certainly inflated asset prices such as gold and oil going into the end of the year, which in turn obviously helped the FTSE and the S&P higher as well. We did get a massive surge on the S&P yesterday, which was quite impressive. Okay, dip buying, etc., etc. But no, volume certainly coming back to some sort of a normal rate, and we'll be able to understand and interpret price action much better. Okay, so going forward, so that's certainly something to consider. Okay, so that's basically where we stand in terms of fundamentals for the day. Let's just quickly go through the economic calendar. This morning we've had German core inflation coming in at 0.6%, so stronger than expected, which in turn should keep the euro afloat. Okay, in terms of euro unemployment, German unemployment numbers certainly coming in stronger than expected, so that certainly should keep the German economy strong. UK construction numbers came in weaker than expected, which again should exert weakness on the UK pound. In terms of Brexit, concerns still remain, given the fact that yesterday we had a report that we have another imbecile here in the UK. Unfortunately, it's a year of the imbeciles, known as Ms. Confused, has no idea, baffled, dazed, and totally incompetent Miss Theresa May, okay, as a leader. So we have two imbeciles, one across the pond and one obviously at home, unfortunately. Okay, they have no idea what they're doing. They're just basically what should we say? It's just thinking on the job really, and there is no real plan from that perspective or organisation. And given the fact that total chaos, total uncertainty, there was a report out yesterday from one of their own Tory experts saying that she's going to lose more than 50% of the seats in London. So again, calls for her to depart, which should create political uncertainty, which in turn obviously is a risk aversion. Okay, so bear all that in mind. Okay, now let's look at the technical picture, given the fact that the major story at the start of the year has been a stronger euro above 1.20, which in turn has caused a lot of chaos in terms of European exports. As you can see here, we retested that pivot high at 1.1270, 12070. So again, euro strength hurting European exports, which in turn hurts European equities. Talk of the end of QE from Mr. Draghi as well, which in turn obviously has caused chaos and caused pain for European equities, hence the reason why we've seen weakness there. Bringing up the dollar index, or even the bonds as well, bear in mind the bonds certainly held a potential support on the bonds. We've bounced. We are now coming into resistance, therefore expect equities to come into resistance as well. In terms of the dollar index, have I got the dollar index here? I don't think I have. No, I don't have the dollar index here, so I'll leave that for now. Yes, sorry, I have. Okay, dollar index certainly coming here, bouncing off support. Okay, certainly causing a weakness in euro pairs, which in turn, as you can see here, we are now coming into resistance on the dollar index, so bear that in mind. On the 10-minute chart, let's just go to a 60-minute chart. Okay, let's just go to a 4-hour chart. I'll give you more of an insight here. Or even go to a daily chart. Okay, let's move to a daily chart, see exactly where we are. So certainly a bouncing from here. Again, you can see this decline here, okay, going in towards the end of the year, which in turn has helped the FTSE, helped the S&P 500 as well. Okay, so the dollar index certainly looking to potentially bounce here now. Let's see if we are going to see weakness in your equities too. Okay, so that's the status quo at present, okay, in terms of the fundamentals. In terms of technicals now, let's look at the actual German DAX itself. The German DAX just certainly put in a bottoming tail yesterday, certainly exerting weakness there, or certainly showing weakness there as well. Okay, so again, you're just about holding support here. You had gap fill, excuse me, gap fill down towards the 12,700 region. German DAX certainly under immense pressure, given the fact that obviously you've got German coalition uncertainty, you've now got potential QE uncertainty, so it certainly isn't a good or certainly not good ingredients for a bullish pie, shall we say. Okay, so again, it's cause for concern. Watch out for that potential bottoming tail though. Let's see if we can hold that. If you fail to hold that, then you do have these gaps here. You've got 12,700, which we haven't closed yet. You've got 12,657, then a gap at 12,600, potential test at 200 MA as well. Bearing in mind the daily chart, the German DAX, you've held that right shoulder, so just bear that in mind. Okay, so right shoulder of this H&S formation. It's not a perfect H&S, but either way, you've got left shoulder here, then obviously right shoulder certainly coming into place at present. So the whole concept is you've got the right shoulder, okay, lower high. Okay, that's the status quo. On the daily chart, the German DAX, and German DAX is the key driver in Europe. So again, whichever way the DAX will go, that's the way the European markets will go. You can see here diagonal trend line certainly came into support at 12,750, so technically it's sound, okay, from that perspective. Again, any bounce will be seen, so any bounce you'll face resistance at 13,010, okay, and then obviously you have resistance at these levels as well. You've got previous support equals resistance on the 13,150 zone, so watch out there as well. So an impressive bounce thus far, okay, almost a 200 pip bounce. Okay, let's see if we can bounce even further, and if we do, you are seeing resistance at 13,000. Okay, so that's the German DAX story for you. 10-minute chart, let's just quickly go into that and give you an insight there as well. Bear with me. Okay, so moving on to the 10-minute chart for the German DAX here, you can see that we've not closed the gap thus far. Okay, but if the euro remains above and stays afloat, then that gap certainly will be looking to be closed very, very quickly. So watch out there in terms of the German DAX. Certainly has been quite an impressive sell-off on the German DAX thus far. Having said that, you've got stronger German employment data as well today, so watch out there, although stronger inflation numbers came in as well. So if you are trading the DAX, be nimble. Okay, that's all I can say for now. Again, I'm not a big trader of the DAX. I prefer to use the DAX to project the next movements on the French CAC and obviously on the European Euro stocks as well. So again, stronger employment data does obviously support a bullish argument there from the German DAX, so just bear that in mind as well. Again, you've got a gap fill below if the euro continues to strengthen. One could argue that stronger inflation and stronger employment data will cause the euro to strengthen, which in turn obviously will cause the German DAX to fall as well. One could argue that. Or alternatively, you could argue stronger employment against the weaker or stronger inflation argument, and therefore you are looking for a potential move higher in the German DAX as well. So again, arguments can be made from a fundamental perspective on both sides. So again, just be nimble. Okay, that's all I can say. Follow your technicals. You've got resistance there at 12,950. If you break that, then you are looking to go higher, possibly test that 13,000 level on the 60-minute chart, which I was depicting before. Okay, moving on in terms of the French CAC, let's see exactly where we are here. Looking at the daily chart first and foremost, let's get a bird's eye view for 2018. Okay, Again, one of the reasons why I went long yesterday on the French CAC was given the fact you got 200 MA gap fill support as well, looking for a potential bounce, and that's exactly what we're getting at the moment. We did have a symmetrical wedge type scenario where we broke lower, obviously due to the fact that we had a stronger euro, which in turn obviously was certainly exacerbated by a weaker dollar. Okay, and again, commodities failed to stem that tide in terms of selling. So the main concept here is that on the daily chart you do have a low high. We held that fib 61%. So any retrace now will be a shorting opportunity from my perspective. Potential looking down to 5 gap fill at 5100. This is long term, obviously depends on your time frame, but that certainly is a picture certainly being obviously painted there at present. Okay, in terms of the French CAC, again, any retracement now you are looking at around the 5330 for potential pause, and that's probably a level that I may well be interested at shorting. For now, I'm going to sit the sidelines. Okay, you've certainly bounced, given the fact that obviously horizontal support was here, gap fill was here as well, and you do have multiple gaps below. So again, watch out for your technical levels. In terms of French CAC, if we continue to thrust higher, then the next level of resistance at 5355, 5330, and then ultimately at 5390 if this market really starts to rip. Okay, bear in mind it has been a bull market for the most of 2017, and certainly don't forget that. Okay, just a few days of weakness doesn't necessarily dictate the actual direction. Again, you are looking at resistance around the 5330 zone. That's the level that I'll be looking to potentially exit on my potential swing longs in the French CAC. Okay, so that's basically where we are in terms of the FTSE 100. Last but not least, this is a pattern that I'm certainly watching very carefully. Okay, on the 60-minute chart, looking for a potential H&S top. So again, I'll be happy to short around the 73.50, 73.60, stop loss above the fib 75, and look for a potential flush on the downside and on the FTSE 100. Okay, watch out there. 10-minute chart at the moment, you certainly are holding the key support zone around that 7640 zone. You've got resistance around the 7660 zone, and obviously you've got double top there in terms of the next move in this market. So watch out there in terms of where the FTSE 100 is going to go. You've got 7700. We were actually above 7700 in the after hours, okay, given the actual New Year's break and the light volume there as well. Okay, so that's the status quo. Certainly a lot of stop hunting going on above there, and then obviously we dropped almost 100 pips. Interesting. Either way, that's the status quo, folks. Again, 7650 another area, 7660 again a zone that I'll be more than happy to short the FTSE with a stop loss above 7690. Okay. That's basically where we stand. The daily chart on the FTSE still is a breakout, though. Bear that in mind. Whether that's a fake out certainly needs to be questioned from my perspective. Okay, let's see if we can break this bullish channel, start to break lower. Ideally, we want to break 7620, then the bears certainly come into play. Then you're looking at retesting that breakout zone at 7580. Let's see if we hold that. If we break that, then again, on mass sell-off, okay, from my perspective. Given the Brexit scenario and the concerns and the uncertainty regarding Theresa May and etc., it's very hard for me to see how the FTSE 100 can certainly move higher. It certainly is going to be tough, okay, breaking that 7700 zone from my perspective. I'll be more than happy to short the FTSE going forward as well, especially if commodities certainly start to weaken and the dollar starts to strengthen. Either way, that's my analysis and insight. Again, you're more than welcome to have an opposite view. That's the market. Really, it's traders taking either side. Okay, so again, just follow your risk management, money management rules, adhere to your technical and fundamental arguments, and I wish you the best for 2018. Please be sure to visit CFDs.com. Certainly take advantage of that bonus that's on offer as always. Okay, so again, certainly start to trade with them. Just drop me an email. If you do, you can email me at inter-market-analysis. Sorry, day trader. Let me just bring up the website actually. What am I doing? Let's bring up the website. Okay, you can always email me if you have any questions. More than happy to help as always. Okay, now I also run the live analysis service as well, where I share my trades and insight in real time. Okay, again, you can certainly gain access to that. It's a 1-month free trial, folks, for those that are interested. This is my website, by the way. Okay, inter-market-analysis.com. My email address is here. Okay, it's daytrader@inter-market-analysis.com. Be sure to visit my website. Be sure to email me any questions. If you do set up the trading account, drop me an email. Okay, with regards to that, and be sure to check out my other services that are on offer. We have the mentoring, or I have the mentoring program on a one-to-one basis that you may well be interested in. There's a free trial option there as well, and obviously there's a live analysis service too. So on that note, I wish you again a happy new year, and take care. Goodbye now.